The following is a presentation of TFNN.
Let's go to David from Clearwater.
Hey, Steve, thank you for taking my call. I just wanted to pass a compliment to you. Taken a lot of classes from Tom since I became a Tiger back in 2009, and they're always phenomenal classes. And last Friday was my first class with you. And just want to say, Steve, fantastic. You were well prepared. The material was excellent. It was timely. It was a really, really, really good class, and you kind of opened my eyes to a few things that have enabled me to use your terminology. Take massive action.
Hey, there you go. I love it.
Live at TFNN, The Trader's Edge, with your host, Steve Rhodes.
And he's picked out a landing spot that is a good 25 feet above the hull.
There's a good chance he doesn't get this inside the Marco's ball.
Well, here it comes. Oh, my goodness. Seen anything like that? This guy's pretty good.
Now, the author of Mastering Probability, Steve Rhodes.
Good morning from TFNN. Welcome to the April 24th. Terrific Thursday edition of today's opening bell on the Trader's Edge. I'm your host, Steve Rhodes, author of Mastering Probability, the newsletter that is the intelligence for creating your financial freedom. My outcome, as always, is to teach you and help you master the tools for trading and investing, and that includes tools that help each of us to lead an inspired life. Because leading an inspired life, folks, truly, that's what it's all about. So let's go check out one of our tools, the tool I call the power of focus. Now, many of you may know that I was born and raised in the great state of Michigan. Of course, I consider Florida, I think most people do, Florida to be Michigan's lower peninsula. So I guess I'm still in Michigan. Now, as a kid growing up in Michigan, I had several jobs such as newspaper routes, landscaping, worked as a cement mason one summer, a parking lot striper. I ran a silkscreen T-shirt business. I worked as a tax preparer during tax season. I was a bag boy and a grocery store stocker. Many of you may have had some of those jobs as well. Now, my first grocery store job, I worked for a company called Great Scott, and I worked at their store at the intersection of Telegraph and Schoolcraft, for those of you that are familiar with the Detroit area. Of course, one of my duties was to fetch carts, and one afternoon while going out to gather the carts, I could see in the distance a really bad car wreck that had happened the night before. I mean, really bad. It was a kind where a driver was able to find the only light pole that existed in the seeable area and somehow proceeded to wrap their car around it. Have you ever been driving down the road and seen an accident where someone was able to hit the only large standing object in an open space? I don't know about you, but I've seen it several times, and I always wondered, how the heck could someone hit the only pole when there was so much free space in the surrounding area? You probably know the answer, folks. The answer is this. The answer is focus. And I'll come back to that in a minute because focus is so important in understanding why we do the things that we do. Let me give you another example. Easter Sunday, 1971. My best friend John's infantry group came under attack in Vietnam. It was an ambush. Turns out it was the fourth deadliest day in 1971. Now, John, he survived, but many others didn't. And during John's tour of duty, he came under fire, many ambushes, and unfortunately experienced more life and death experiences than any other human being should ever have to encounter in their lifetime. Here's the thing. On a couple occasions, he had to, in a split second, he had to decide whether to stay hunkered down in what seemed like a somewhat safe position or leave that so-called safe space, risk his life, to go help a fallen buddy. In each case, he chose to do that. He put his life at risk, and many occasions he really never gave it a second thought. In fact, did you ever see the movie Top Gun? If so, you may remember the scene when Maverick visits Viper's house and Viper proceeds to tell Maverick, he says, "Yeah, I flew with your old man. You're a lot like he was, only better and worse. He was a natural, heroic son of a bitch." And that's exactly how I think of my best friend, John. All right, I know you're saying, so what does this have to do with focus? I'm getting there. Fast forward many years later. For John's birthday, which is very close to Easter in some years, I bought him a driving school package at the Daytona 500 Speedway. Yep, he was going to get into a real NASCAR, race it around the track at speed somewhere between 150 to 190 miles per hour, more towards the latter. And fast cars, they were nothing new to John, but of course, he's never driven a car at 150 plus on the Daytona Speedway. Seems pretty easy, doesn't it? So we get to the Speedway, we get to the driving school, and the instructor says, look, in order to be a great driver, you need to have one skill, a skill that if you don't master, you will crash and burn. So the instructor goes on to say you must learn how to come out of a spin. And when you're driving, even if you're doing everything right, someone is going to come up, they're going to cut you off, they're going to make a bonehead move, and you are going to have to react. Now, John is thinking about driving, and I'm thinking, wow, what a great metaphor for life. The most important skill that we have to master is how to come out of a spin. I mean, isn't that really the truth? I'm pretty sure that at one point in time in your life, each of you have had to come out of a spin. In fact, most of the folks that we know live in a spin most of their life. A spin means where you're not in control. So the instructor goes on to say, he says, here's the key. You have to focus on where you want to go, not on where you don't want to go. And you've got to point your head in the direction of where you want to go. And it was at that moment that I realized that I truly understood how a driver could wrap itself around the only pole in a totally open area. The driver focused on what they didn't want. Think about that, folks. I mean, it's no more than just a metaphor in life. It is reality. And that's so important when we are trading and investing and doing everything in our life. So after a few hours at driving school, it's time to head to the track, and John jumps in the passenger seat with the instructor so that he can get a feel for what it's going to be like when he gets behind the wheel, drives the car by himself. Here comes the second metaphor in life, or one of the second metaphors, and that is that most everyone likes it when they're in control. So the question is, are you in control of your trading? Question. Let me ask you this question. Have you been on a motorcycle? Which would you rather be, the driver or the passenger? Who has control? Exactly. It's a totally different experience when you're in control. So John and the test driver, they go around the track 10 laps or so. John, he gets out of the car, he looks at me and he says, I don't think I can do this. I'm too scared. I'm going to hit the wall. Folks, he was dead serious. And for the first time in his life, first time in my life, I should say, really, I saw fear in his eyes. He said, do you realize how close we are traveling to that wall? Now, folks, this birthday gift, not exactly cheap. My best buddy just threw me a curveball that I didn't expect. I mean, this guy went through hell and back in Vietnam on so many occasions in real life, and he is one heroic son of a gun. He just hit the wall, but in his mind, right, he had just hit the wall doing 180 miles per hour at Daytona Speedway. So all I could say to myself was, think fast, think fast, think fast. And, of course, what I did was I went back to linking the known to the unknown. That's the quickest way to be able to teach somebody something. You see, when John risked his life to help his buddies in Vietnam, he was focused on what he wanted to do, not on what he didn't want to happen. And at Daytona, at that very moment, he was focused on just the opposite. So within a few minutes, I was able to help him change his focus, get on track, and it was his skills that produced the fastest lap speed that day for the entire group of folks that went to that driving school. Folks, you and I, we can and we will manifest that which we focus on in our life. Always focus on what you want. Whatever comes into your life that you don't want, get rid of it. I mean, get rid of it quickly. Each day, take some action. Point your head. Point yourself towards the direction of your outcome. Focus, folks. It is your strongest power. It is Terrific Thursday, and welcome to the show. Let's go check out the markets here. Right now, we got the Dow futures. They're up 9 points, trading out at 16,469. S&P futures, they're up about 6. They're trading at 1878. NASDAQ up 53 points out there, courtesy of companies like Apple and Facebook. We'll take a look at those stock charts. NASDAQ right now trading out at 36.08. Russell 2000 up 5 points, trading at 11.50. Goldilocks back $10. It's off of its lows. It's trading at 12.74. It traded down to 12.68 early this morning. Silver down 15 cents right now. It's traded at 19.28 out there. Low so far 18.93. Light sweet crude on the way up. It's up 70 cents, trading out at 102.14. Our call number is 877-927-6648. Okay, boy, we got so much to take a look at. Let's begin. Where do we want to begin? Let's take a look at the NASDAQ itself. Let's look at the daily chart for the NASDAQ. If you are listening on the radio or your mobile device at TFNN.mobi, thanks so much for doing that. I'll describe to you what we're looking at. Of course, if you're watching us on TigerTV, you can see the descending price channel that the NASDAQ formed. This is really beginning. We're using the co-located opens and closes of a body. The body is a true essence of price out here. That's the open of the trading session from March 6th out there. That open was at 37.2250. That's really your first touch point, your next touch point. It could be the close of March 20th. It could be the open as well of April the 3rd out there at 36.09. So what we can see here, and of course, you've been listening to the radio show for the last week. You know I have been bullish. It first started out as counter-trend bullish. I felt there was a strong enough move with regard to the stretch of the rubber band that we'd see a nice elastic bounce inside of the market. In fact, quite frankly, the NASDAQ has now hit my original target. 36.1250. That's the 0.786 retracement of the move down here from April the 3rd down to the low. Key reversal session, the whole, well, really was a hammer candle that formed here on April the 15th out here. As we take a look at the daily contract out here, that was at a low of 34.0475. As you know, hammer candles are really great at hammering out a low out there. What I didn't expect was just a straight rise up. I expected a rise. I actually expected an A to B equals CD that might form on the move up, setting up the next sell pattern out here. So what the NASDAQ is up against right now is absolute resistance. And this is going to be key today. It'll be key to watch how this session unfolds. Because if price closes above 36.13 out here, you're at 36.11. Remember, this is pretty significant resistance. So this is kind of the moment here to fish, cut bait, wait and watch, adjust your stops. That's what I'm doing, just simply adjusting my stops in these trades here. I'll let the market do what it's going to do because I know I can't control that. What I can control, the power of focus, what I can control is the decision that I make. What I can control is how it is that I'm going to trade this. At this stage here, it looks to me like with everything else that I'm taking a look at in the charts out here, it looks to me like, you know what? Maybe this today would be the day where you'd expect the market to start to perhaps begin to see some type of slight pullback. I thought it would be yesterday. And if we took a look at the indexes, we would say, yeah, yesterday was a big slight pullback out here. But it really wasn't the case inside the futures contract, certainly not inside the week link out here. So maybe today is it. However, if it gets above 36.13, comes back, retests that descending price channel, and then moves higher, folks, you know what that's called? That's called a change in trend, a real change in trend. 877-927-6648. We'll be right back, folks.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock in option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Investors, Taz Market Research delivers to its subscribers expert commentary on the analysis of 15 different markets each day. Get this invaluable and timely information through the daily market research videos Taz Market Research produces each day before 9 a.m. The video analysis will include reports on currencies, interest rates, indices, metals, energies, grains, and more. You'll be able to gauge where high profitability setups are in each of the markets. Receive a free 2-week trial subscription to Taz Market Research videos on the front page of TFNN.com.
TFNN is back with another Tiger Dollar special, and as part of this promotion, not only can you receive up to a 25% bonus on whatever you spend, but you can also gain access to a 5-part live webinar series with Tom O'Brien taking place the week of April 28th. Each morning during the week at 8 a.m., Tom O'Brien will walk you through how he sets up the market live and digest the previous day's trading action while analyzing overnight markets abroad in order to anticipate what kind of trading day to expect. Each 60-minute live morning webinar will be archived by around 9:30 a.m. that very morning, so that if you can't attend live, it'll be available for your viewing pleasure on demand whenever you're ready. Tiger Dollars can be used for any TFNN newsletter or service, and they never expire, so now is a great time to lock in extra savings on all TFNN products. Don't miss out on Tom O'Brien's 5-part webinar series. Get your Tiger Dollars today with up to a 25% bonus on whatever you spend before this special is over by visiting TFNN.com.
With the launch of TigerTV, TFNN has brought our programming to the next level. With TigerTV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, David White, Larry Pesavento, Andy Hecht, Victor Jones, or Daryl Martin, you can catch all of our technicians hosting their programs live and archived on TigerTV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out TigerTV, then visit TFNN.com and see what you're missing. Steve takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. I'm Steve Rhodes, developer of the Rhodes Momentum Indicators. And as you know, a key to financial freedom, well, it's to get your money to work harder for you than you do for it. And I know how hard you work for your money, and there's nothing I take more seriously than putting my clients' money at risk. Now, the cost of my newsletter service, Mastering Probability, well, it's as little as $3 a day if you take advantage of our Tiger Dollar promotion, which is going to end next Monday. So make sure you get over to the homepage at TFNN.com and you take advantage of that. And the newsletter service, Mastering Probability, well, it's producing a profit of about $9.50 a day for every $10,000 in your trading account. So that means if you've got $100,000 in your trading account, this goes back to last August when we really began trading the Rhodes Momentum Indicator System. It's producing $95 a day versus an investment of $3 a day, less than a gallon of gas, less than what you spend on a Starbucks coffee that you wouldn't even think about. Folks, Mastering Probability, it's one way to get your money to work harder for you than you do for it. Yesterday, we bought Facebook. Going into the close, we bought it for $61.24. You may say, how did we come up with that figure, or why did we buy Facebook? Use really a number of different tools out here. Number one, what we did was we went back and we, in essence, bought the breakout. What did Facebook do out here most recently? January 3rd, wide price spread, accelerated volume, moves topside, 150 million shares, makes a higher high. Does this on the trading session here of March the 11th, gets up to 72.59. What does it do from then? It comes all the way back into the breakout area. Now, never close the gap out there. That's okay. Came back into that breakout area. Remember, the benchmark here, 150 million, or if you want to use a benchmark, you could use the trading session from January 29th, 98 million, make it even more difficult. Well, as it came back down into that level, it did it with 108 million shares. Came back here Tested that again with 108 million shares back on April the 15th. All I did was, and then what else did it do if we take a look? So this came back into a breakout area. It formed an A to B equals C to the downside, came back, tested that level with a lighter volume. We take the Basil Chapman's Chapman Wave. We go ahead and we count the peaks and the troughs. In this case here, I'll just put my little trough counter on there. We'll count it on the way down. What did it hit? It hit that fourth trough before it actually started to move higher out there. Gave us a reversal signal in here. So it gave us everything that we needed to do. Now, had no idea whether the trade would work out or not. We just simply waited it. I wanted to buy it the trading session here on April the 22nd, but it went ahead and gapped up. And so I told my clients, you know what? We want to buy this at around the 61.24 level. That's the top of the April 21st area. Let's not chase it on the trading session of today's Thursday on Tuesday. Let's wait for it to pull back, and that's exactly what it did going into the close yesterday. Now it's trading out at 63.35. 63. Now this has the potential. Well, number one, we got a couple different ways. Those clients that bought it, and this was probably at about, 350, 355, something like that when our limit order was hit out there. And so clients have an opportunity this morning to either just go ahead and bag a fairly large percentage overnight. Nothing wrong with making money. That's really what this business is all about. Some of them may have even sold into the pre-market here. For me, I just simply adjust my stop. It's above break even. And what I want to see here is what's the volume behind this. Look, this could be a pop and drop. I absolutely understand that. But what I do know is I'm in a trade right now that is risk-free. If it pops and it drops and it pulls all the way back, okay, I may have given up some profits. On the other hand, Facebook, in this, if it's got some volume in it today, there's no reason for it to not move higher. Could easily move up, and it should at least go and move and test the swing point for March 11th. That only has 59 million shares out there, and that level is between 69.96 and 72.50. That's the likely target for Facebook out here. And then 76.21. Like I say, there's only one thing that we can control. You want to be in control. When you are trading and investing, you want to have a strategy. You want to use tactics, but you need to have a strategy. And the reason is because strategists, they will slay a tactician all the time. You want to have more than tactics out here. Tactics, those are, and stops. And what's always amazing to me is how few people actually use stops. Now, of course, if you're one of the 70% plus that have got your money in retirement funds and are being managed, maybe by so-called professional. Of course, these are professionals that would drive around Daytona Speedway without their hands on the wheel. Because if you're not using stops, folks, you might as well just go out in your car, drive your car, and not have your hands on the wheel. In fact, what you ought to do is just focus on the tree when your car starts to spin out there. Because then you're not sure whether I should get out or I shouldn't get out. And the reason is because of the emotion that's involved at that stage. Before you get in a trade, have everything planned out. That is when you are the most objective. And then during the trade, go ahead and adjust if you need to. But by all means, please have exits on both sides of the trade out there. We get back from this break. Certainly, we're going to go take a look at Apple. Let's take a look at it here in the moment. Right now, you've got Apple. What is that trading out at? About right around $5.69. The interesting thing here on Apple, it already gave you the signal that it wanted to move higher. It formed an island bottom reversal pattern out here in between the time frame of January 28th and February 6th out there. Now today it's going to make the D point of an A to B equals C to the upside. Apple's got further to run topside as well. We'll be right back, folks.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
And Andy Heck's powerful weekly newsletter, the Technomental Commodity Report, has delivered multiple triple-digit winning trades in recent months. And right now's the perfect time to get a full month-long trial to Andy's newsletter with no obligation to pay anything. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Technomental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you'll lock in the low rate of only $59 a month. Sign up right now for the Technomental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
Who says you can't take it with you? TFNN says you can. With your mobile device and TFNN's live radio streams, TFNN has put it all in the palm of your hands. No special apps to download. No subscription fees for live radio or TigerTV streams. We say you can.
Now let's go over to the dollar, because the dollar is going to be the generator. It is the generator of basically higher dollar, lower market. And what the dollar has done, and this whole uptrend, folks, has just gone sideways. The way it works, folks, is this.
We say you can. The Tiger Financial News Network. Smart investors and professional traders know you can. TFNN.com. Educating investors. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
And we're off to the races. We got the Dow up about 25 points, trading out at 16,530. S&P up about 7. It's trading out at 1881. Composite up about 48 points right now, trading out at 41.75. Let's go peek in on Apple. It's trading out right now up about $40 or so, trading right around the 556 level out here. So, before we went to break, we're taking a look at Apple. If we take a look at the stock chart, if you go back and take a look at what Apple did on the trading session of January 28th, down with volume, down with big volume, gaps down, creates a big gap out there, trades a little bit lower to sideways, really, for a period of 1, 2, 3, 4, 5, 6, 7 sessions out there. And then the trading session of February 6th, the actual high, 513.50. The very next trading session, the low, 517.38. What Apple did out there was it created that little island reversal. In fact, that little gap out there, that little sign of strength, price came back and tested that level, formed the C point of an A to B equals CD to the upside. It did that on the trading session of April the 15th out here. How about that, when the market was also making its lows? That became the C point. Now, what it did here this morning was really almost to the penny. It had gone ahead and it formed the D point, right, of an A to B equals CD. Now, 60% of the times, an A to B equals CD pattern is going to go ahead and complete with a 1-to-1 extension, just a normal extension out there. It's the other 40% where you want to really learn how to master that C to D leg, where you're going to get more than a one-to-one extension out there. And in the case of Apple, that's what I suspect we will see take place out here. So 569.22, that's your one-to-one, or 569, we'll just call it and change. We already hit the 569-ish type area out here. Where is the next level? Now, what Apple's also doing, and we're going to want to be paying attention to volume, it's also coming into a couple of different resistance levels. So this is going to be really important to watch how Apple trades. One, because of its weighting with inside the NDX 100 out here, and with its opportunity now to kind of beat its chest and become a leader of the pack out here. We'll see if, in fact, it's able to do that today. It's dealing with a couple areas. Number one, it's dealing with a swing point from December 5th out there. That swing point's only got 15 million shares in there, so it should have no problem today doing 15-plus million shares in the equity. It's only been trading here for, 6 minutes or so. I show volume of about 3 million, but I'm having a little trouble here with my data feed. I've been trying to pinpoint where the issues are coming from, so I'll be able to, in this next break, in about 13 minutes, reboot a couple of things out there. CPU chip, because of all the things I've been running, was actually running at 100% usage out here. So, in any event, let's just take a look at this. What other areas of resistance is it running into? Well, pretty simple out here. It's running into two areas that it needs to clear. Number one, there was also, if you go back further on the left-hand side of the chart for Apple, you'll see another gap down here, 37 million shares. That was on December the 5th. The top of that is 569. So we have some resistance here of a previous swing point. We have resistance if we go back far enough on the left-hand side of the chart out here on December 5th with that gap down. That's a 569 area. So plenty of resistance. Now, if Apple can actually get above that area, then old resistance will become what? Will become new support. So if Apple does clear this area, whether it's today, whether it's tomorrow, hey, maybe it's never. Maybe this just simply is acting as a resistance point. What I can do is I can help you to identify where the resistance areas are. What happens if price gets above those resistance areas, which in this case here should be a new support, or where it just simply acts as a normal area of resistance. Those are important to be able to take a look at because they'll help you to determine what your trading strategy ought to be. Not just a tactic, but what your trading strategy ought to be. Now, if in fact Apple can clear this area, and that acts as support, then it's got one more swing point that it needs to clear, and that's going to be the high that was formed on December the 3rd out there at 594.59. It will need to clear that. Once it clears that, then it would have freedom to run all the way up into the level of about $642 or so. In fact, what's important to be watching today is the actual swing point. This is why we're going to go back here to the swing point of, this is why it's so important, of December 6th, that only has 13 million shares, is that if Apple can actually get above that, that sets up a much larger A to B equals CD to the upside out here. So very important to be watching Apple, to be watching this 569 area, significant areas of resistance. And if Apple can get above that, folks, and with its weighting inside of the NDX 100, what's the percentage out there? 11, 13, something like that. I can't remember off the top of my head. I put it in my newsletter this morning. If it can, in fact, get above that area, that'll be very important with regard to what will take place. Let's go to Victor in Paramus, New Jersey. Victor, thanks for calling. Thanks for holding. How you doing?
Good. I had a question for you on that gap. Now, does that get closed? And even when it splits, what does that do to that gap? That's a one-gap play right now, right?
Well, I mean, I don't know if there's anything, such as a one-gap play, a three-gap play, but what will happen is, just do the 7-for-1 split, which is, I think, sometime in June. I don't recall what the date is on that, and it'll just simply get adjusted on a stock chart. It'll just simply get adjusted. But remember here, what a gap is. A gap, at least from my perspective, and is nothing more than a breakout session. And so when you hear the terminology that gaps get filled, as long as price is coming back into a gap area and lighter volume, it just means it's coming back into a breakout area. So
it
could take who knows how what you want to do is you want to take. Go ahead.
Are they diluting the shareholder? Is this sort of like the new IBM? They're just diluting the shareholder and then they're buying back their shares. It sounds like a little game they're playing.
You know what I think? I think, Victor, my thoughts on one potential possibility is this. And that is that, I consider it to be Apple kind of, it's been big company out there, obviously, great company, and more of an industrial company. I mean, it's producing products as well as services. I think this move and the reason for the 7-to-1 split was to get Apple into the price range, maybe around the middle of the pack or so of the Dow stocks. I think what Apple wants to do is Apple wants to move into the Dow. I think that's really the plans behind. Okay. Normal stock splits, people hear, okay, 2 for 1, something like that. And so why the unusual? Maybe you might hear a reverse stock split of 10-to-1. And so why the unusualness of 7-to-1? And I think when you take a look at it, you'll find that if you go take a look at all the Dow stocks out there, they fit right into the middle of the pack. So the S&P 500, Apple's a part of the S&P 500, obviously, and the S&P 500 is owned by Dow or vice versa, and so this becomes a real easy way for Apple to make its way into the big boys out there. I mean, what's Goldman Sachs doing in there anyways? I mean, they're not an industrial. Dow Jones Industrials, I believe, is the name of the actual index out there. So I hope that helps answer your question, Victor. What a real problem here. It's almost like I should just restart this system with 8 minutes to go because it makes it really difficult for me to navigate through here while the system is not really providing me with all the data. But, man, I hate to just do that. So let's not do that. I can somehow manage during this next 7 minutes out here. And so that's what I'm going to do. Let's go take a look at gold, Goldilocks silver, see what it is doing out here. Thanks, Russ. Apple was 11.8% of the Qs yesterday, and that's why it's really important for us to be paying attention to it. So let's switch over. Let's go take a look at gold, silver, light sweet crude, see what they are doing here this morning as we take a look at I had Facebook up on my screen. I think we covered Facebook, so I don't need to do that. If we take a look at gold right now, what gold is flirting with closing below its B point of a potential A to B equals CD to the downside. And that is the price point of $1277.40. If gold today closes below that, well, first, if it does volume of more than 133,000 contracts out here, and probably as of about 15 minutes ago, I had it with 92,000 contracts out here. So if it closes below that, that would give you a confirmed A to B equals CD to the downside. Now, if I take a look at what gold has done here as of this morning, number one, if you come off of the swing point back on December 31st, in essence, it's made a 0.618 retracement. So there may be some support right around this 1268 level. Number one, it was a 0.618 retracement from the low of December 31st to the high that came in on March the 17th. Number two, there's kind of a set of swing points out here, a number of swing points in the price range of about 1238 or so. 1238 to that price point to the high of March 17th, that becomes a 0.786 retracement out there. So there is another area, normal level of Fibonacci expansion / retracement. If we take a look at an expansion of its last set of swing points, that would take us to the following price level. We haven't hit that here. That would be your 1.272 area. That's at about the 1262 area. So I'd be watching that 1262. If, in fact, gold spikes that, holds that, closes back above the B point, if it can do that with light volume out there, that would be more bullish than bearish. No reversal signal, though, as of yet, but that would be more bullish than bearish out there in the market. And likewise, if it closes below 1277.40, and if it does that with more than 133,000 contracts, then what you're looking at is you're looking at an A to B equals CD to the downside. Where would that take Goldilocks? Well, the 1-to-1 A to B equals CD takes it to 1216. But I would say, knowing that only 60% of A to B equals CDs go ahead and form a 1-to-1, that if in fact gold is able to do that, then you're looking at a move down to about 1216 out there. So we'll see how gold plays out the day today. We go take a look at high-ho silver out here. Silver right now. Again, I don't have the exact, let me see if I can figure out where silver's trading. Won't know exactly until my system resets out here. Looks like thank you, Z says 1956. So if we take a look at 1956, number one, the B point of an A to B equals CD to the downside. That low is the 1957 level. That is the March 27th area. So it looks like silver may be trying to get back inside of the of that move out here. If it's unable to do that, if it's unable to get above 1957, what silver's going to likely do as a minimum is come down and test the low from December 31st. That's at the 1880 level, but it could actually move quite a bit lower than that. If we take a look at the swing point high, and that is the 2215 price point. That's from February 24th down to its B point out here, March 27th, out at 1957. If it stays below 1957, that is actually communicating to us that it might want to trade all the way down to 1775 out there. So we'll have a pretty decent feel, as the day proceeds. If we go take a look at light sweet crude right now. Let's see, you got gold's up $6 versus down. Let me see. I'm just trying to find light sweet crude's up about 48 cents right now. And we take a look. We take a look at light sweet crude. It's got some pretty decent support right around the $100 mark. But if we take a look at this could be forming an A to B equals C to the downside, a small one. If we take a look at coming off the high from April 16th down to the low out here, and that is at a price level of 101.20. That's from April 23rd. That is from yesterday. So far, what it's done is it's done the dead cat bounce, the 0.382 retracement. 102.99 would be your 0.618 level. If, in fact, the light sweet crude gets up there, does that on lighter volume, that is probably setting up the C point of an A to B equals CD to the downside. In fact, let's go take a look and see what that little smaller A to B equals C to the downside would look like. That's where you would see light sweet crude come, and if we're going to continue lower, then test that little rising price channel. That's the rising price channel coming off of the lows back on January 13, 2014. Those are the black diagonal lines going across my screen. I say the heck with it. I'm just going to go ahead and save this page. Yeah, I'm just going to go ahead and shut this thing down because it's pretty much been of no use to me here. And see if I can get this thing restarted, even though we got 2 minutes to go. Close the program. Okay, that'll definitely take things all the way to the downside. That's okay because we can still do some work here. I'm just going to be multitasking while I get this back up and going out there. So appreciate the patience out here. Let's take a look at. Let's go take a look at the currency pairs out here. Let's take a look at. That's what we can do. Let's take a look at the euro Japanese yen. Let's switch over and take a look and see what that is doing here. The euro Japanese yen has really kind of taken a time out the last couple of days. It has just been traveling sideways. Give me a moment. Okay, so I can see at the NASDAQ, it's hit the top of that level, that resistance area, 36.12, and has sold off since then. So a natural area of resistance. Let's take a look at the Euro-Japanese yen. What, too, is it doing out here? Well, let's take a look at it. Euro-Japanese yen forming a doji candle yesterday. If, in fact, we get a close below 141.58, you're at 141.13. That's where the leaves start falling off of the trees out here, and that says, you know what? The Euro-Japanese yen can make its way all the way back down to the bottom of its consolidation range, and that's a level of 140.38 out there. That is pretty decent support. We'll, in fact, see if, in fact, that level can hold. There we go, back up and running. It is a beautiful thing. Let's go take a look at some stocks here also that are popping and dropping. Let's go take a look at Showdown. Let's go take a look at Core Laboratories. CLB is the ticker symbol. We've got Core Laboratories trading down about 6% off $15 and change. Let's go see what kind of volume is behind this move out here. Pretty good volume. When we get back, we'll go finish up. Take a look at Core Laboratories. I see a little breakout, a little sign of strength that has held thus far that's probably going to trade back into right around the 176 level. Right now trading at 199. We'll be right back, folks.
You take a hands-on approach to managing your investment strategy. You're always looking for the next trading opportunity to magnify your perspective. Direction Shares connects sophisticated traders with a powerful array of ETFs from a wide range of asset classes. The markets may go up and down, and you want tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foreside Fund Services, LLC.
Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com. Eastern legend tells of a fair maiden who was offered a rare gift by the king of the land, a bag of pearls. The king promised that she could keep the largest, most perfect pearl she could find with these 3 conditions. 1, choose only 1 pearl. 2, remove 1 pearl at a time, accept or reject it. And 3, if rejected, it would be lost forever. She began by looking at the pearls, passing on many special treasures. She delved deeper into the bag, and soon the pearls were replaced with pebbles. Sadly, she went home empty-handed. Folks, replace pearls with time, because we cannot go back even 2 seconds. We live in the eternal moment of now. So when now are you going to take advantage of my offer to you, a subscription to my daily investment newsletter service, Mastering Probability, where you can experience the most incredible pearls for trading and investing, the Rhodes Momentum Indicator and Strategy. The offer? It gets better. A 30-day money-back guarantee. Don't go home empty-handed. Mastering Probability. Available on the homepage of TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
Catch the Money Masters as they teach you the art of mastering money when it comes to trading and investing. Next on TFNN.
Welcome back, folks. We've got the Dow off about 25 points, I have to say, about, because I'm still having some system problems here. So I got some work cut out for me after the show is over today. I've tried to close as many things down as I can out here. In any event, so it looks like I've got things kind of smoothed out here. So we got the Dow off 23. S&P is basically flat. It's trading out at 1875. Composite is up 4 points out here. Apple still up $39. We have seen Facebook go ahead and sell off from the open out here. Let's take a look at some stocks here that are, let me go back. Let me take a look at the New York Stock Exchange. Let me see if I can see what we have going on out here. So you got net declining issues about 256. That is not putting a dent in the summation index pointing forward. I think we need about 1,175. So New York Stock Exchange, we still got the bullish market in place as we speak right now. Let's go take a look and see what the VIX index is doing here, see if it's above or below the 50-day. It's a little higher. It's trading at 1381, still below the 50-day exponential moving average. That number is 1455 out here. So as we began the show, we took a look at the daily charts for the NDX, for the NQ, I should say. Let's go back. Let's take a look at the daily chart. What we showed out here was price was running really right into a resistance area of that descending price channel. Let's pull that back up on the screen. Let me get the daily chart out here. It'll be a lot more helpful to us if we do that. Give me a moment. We'll pull it up on our screen. And because we saw that level get hit, we've seen it sell off since then. Again, what we should expect after, 1, 2, 3, 4, 5, 6, 7. Of course, today even made a higher high. But after 7 sessions trading to the upside, you have to expect some pullback. And it would only make sense that that pullback began right at the top of that rising price channel. Is that the high? Is that the high in the bounce out here? So far, the other signals out there, the euro-yen is pulling back, so we can see the tango, the dance, is really still in place out here. But we have not seen really a reversal. Fortunately, we haven't seen a key reversal today. I'd have to say on the NQ out here, if, in fact, you were to see it spike down below the low of 35.46, that's what I would be watching out here. What you would end up then with is a key reversal day coming into, and it were to close lower. So you need the combination of those two. If, in fact, it were to do that, then you'd have a key reversal session coming into a 0.786 retracement, coming into the resistance of the descending price channel in the index that led things to the downside. So today's the opportunity for the NASDAQ to say, okay, we've got some selling, but not to show a key reversal session out here, and that's what we want to be paying attention to. If we take a look at the other futures contracts, let's go do that. Let's go see what we've got those looking like on a daily basis from a candlestick standpoint right now. Let's take a look at the NQ again. Let's take a look at the S&P. Let's take a look at the Dow. So the Dow's been the leader out here. So inside the Dow actually right now has all the signals of a key reversal session that is underway. What is that? Well, if we take a look at yesterday, question is this an extended condition? Let's go ahead and give it the benefit of the doubt and say, all right, maybe it is an extended condition. The high of yesterday was 16,505. The high so far this morning, 16,513. Inter-session, we've traded below that level. The low of yesterday, which is 16,411. Right now, you're at 16,420. Any close of a red candle gives it a key reversal session out here. What does that say? Well, it says that a pullback inside the market would likely take it to about the 16,122 area inside of the Dow. So the Dow's going to be an important session today with regard to where it closes, because any lower close out there sends off the message of a key reversal session out here. So we'll see. That's at least in the futures contract is what we're taking a look at. Let's go take a look at the S&P futures. Let's go see what they've done. They, too, would have a key reversal session if, in fact, they closed lower today. That's it for the show. Folks, thanks so much for being here. Putting up with a little delay in my system, but looks like we're all back up and running. Looks like we got the hands back on the wheel. Have a terrific Thursday. I look forward to seeing you in the morning or seeing you in a few when we do the Money Master Show. Take care, folks.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
You're watching Tiger TV.